Are you predicting a blow-off in the silver price? Quite possibly. The stage is set for something the world has never experienced before. An asset bubble accompanied by an industrial shortage. These are the two greatest upward price forces known to man. An asset bubble and a genuine commodity shortage appear set to combine in silver. Either one alone would have a profound impact on the price, but the combination makes it impossible to forecast how high the price of silver can go.
Connection established.
Welcome back, my friends. Thank you so much for tuning in. If you stack silver and you like your daily news to be unfiltered, uncensored, and unbiased, well, you've come to the right place because I do exactly that. So make sure you subscribe. We are quickly on the road to 100,000 subscribers, and also make sure you click that bell so you immediately get notified when I post, because I cover a lot of breaking news. A lot of times I am the first one to cover something, and a lot of times it's extremely important that mainstream media would never touch with a 10-foot pole. I'm going to cover the controversial stuff that nobody else wants to. It's what I do. I dive into the truth and I expose it. And the man we are about to be discussing in this video, Ted Butler, is no different. I cover Ted Butler's work very, very closely because he breaks down the illegal COMEX price corruption with these criminals that should be put in prison, doing things, suppressing the price to degrees nobody else could even possibly fathom. And he breaks it down very, very openly and honestly. And I respect that. And like right here, it says, no one has followed the silver market trading mechanics for as long or as closely as Ted Butler. And that is the truth. I've covered some insane articles that have exposed things to an entirely different light that I ever even could have thought was really happening behind closed doors. And I want to share a little bit of that with you. We'll be covering two different articles. The first one is talking about more evidence of a silver shortage posted last month. And also, this one is going to be good. Jim Cook interviews Ted Butler. And man, oh man, this interview is a good one. He does not hold back whatsoever on his bullishness for silver and why. It's a good one. Jim Cook asks him some good questions. What makes this illegal? Why haven't prices already risen? But he also goes into some other. You recently claimed that the fireworks would start soon. Are you sticking with that? Absolutely. Can't predict the precise point of the price explosion, but all signs, from the physical shortage to the growing awareness that silver is suppressed in price, means fireworks will start sooner rather than later. And even up here, big commercial banks refrain from adding new shorts on silver price rallies. A selling void would cause the price to explode. It will be a bid and no offer. What do you say to the silver holders that are frustrated? It can't take much longer until this fraud ends due to the emergence of the first physical shortage in history. Nothing is more bullish than a shortage of a critically important commodity. And that was only a few sentences from that entire interview. So now you can see why I'm so excited to share that with you. But first, we need to talk about this article because he brings up more evidence of a silver shortage. So this will bring into the context, and then we will go into the exciting interview to wrap it up. So make sure you guys like this video. Please subscribe because I do post daily. Slayer@milesfranklin.com. I have silver for you guys at great prices. 10-ounce bars, $2.50 over spot. We have tons of deals right now. Just email me. I'll hook you guys up. Now let's jump into the article. So recently, the Silver Institute updated its annual review on silver that it originally published in April. It had to update its numbers because they supposedly forgot to put in tens of millions of ounces into the demand. Was it on purpose? Did they get caught? What happened? Who knows really? But anyways, the report indicated a reduction in total supply, mine production plus recycling, and an increase in industrial demand. The new report indicates a total silver supply for 2023 as being 23 million ounces less than originally reported, largely due to a loss of production at the Pensacola mine, a big silver Mexican mine hobbled by a strike this year. Total industrial demand was 21 million ounces more than estimated back in April. A new report indicated that total silver mine production fell to its second lowest year over the past 10 years, while silver industrial demand grew to the highest level ever. Clear evidence that the price of silver is too low, otherwise such developments would not occur. And let me remind you guys, this is the meat and potatoes of where the core is, but the interview we're going to talk about afterwards is just as important. And that's where, the drama, the controversy kind of comes in. It's fun as well. It's not just looking at numbers. So make sure you guys stick through to that point. So there was also a matter of existing stockpiles of silver which could be available for sale. However, over the past 2 to 3 years, there's been a dramatic reduction in total recorded world silver inventories of close to 400 million ounces to 1.3 billion ounces, a total reduction of 30%. This reduction in the world's silver inventories, the largest in history, is due to selling the large insiders, which control the wholesale physical silver trade, mainly JP Morgan, which is the most corrupt bank in the world, which has been caught for manipulation that I'm sure Ted will explain in the interview as well. So over the past 3 or so years, JP Morgan has disposed as much of 50% or 500 million ounces of its billion-ounce hoard of physical silver. This wasn't a pure disposal. While JP Morgan was selling physical silver, it was accumulating a massive long paper derivatives position on the OTC market, mostly with Bank of America on the short side. As a result, over the past 3 years, while JP Morgan disposed of 500 million ounces of physical silver, it has acquired a billion ounces of long OTC silver derivatives. In essence, transforming a billion-ounce physical silver position to a 1.5 billion-ounce net long position. 500 million ounces in physical and 1 billion ounces in OTC derivatives. JP Morgan has increased its total silver holdings in the process of buying valuable time, while its historic deferred criminal prosecution agreement with the Department of Justice for precious metals manipulation ran out 2 months ago. And yes, 3 of their employees got sent to prison. They paid a $920 million fine for suppressing the price of silver or manipulating the price of silver, which is a process called spoofing, which is placing false buy or sell orders on these exchanges and canceling the order before it goes through, which essentially is tricking everyone else on that exchange to think there's more volume. They see a whole bunch of silver being bought up or sold, and then those people in return start investing or making decisions off of false numbers, not knowing that those orders are actually going to be canceled. And they do this thousands upon thousands of times with millions upon millions upon millions of dollars. And it is illegal. Hardest part is, though, it's not illegal to cancel buy or sell orders. So how could you catch someone with the ill intent that they were never going to let that order go through? That's where the gray area is, because you could just tell a judge, hey, I didn't mean to. I didn't know that the order wasn't going to get canceled or whatever. You can see how it's not illegal what they were doing, but it is illegal in the essence of purposely doing it, and you're going to have to find patterns and backdate decades upon decades. And then they showed some of the WhatsApp messages between these inside traders and how disgusting the talk was of how they would brag about what they would do over the weekend, or then they would say, watch what I'm about to do on Friday to the markets, and then afterwards you would see them all messaging each other, bragging about how illegal this stuff is and how easy it was. That was the scariest thing, is in one of the messages they were bragging about how easy it was to do this and get away with it. Ironically, that same exact message he typed out got exposed to everyone. But anyways, let's face it, Silver Institute publishing data more bullish than ever. Oh wait, we missed a part right here. So, historic deferred criminal prosecution agreement with the Department of Justice for precious metals manipulation ran out 2 months ago. Any suggestion that JP Morgan is not the master precious metals market criminal of all time is laughable, which I was just mentioning, right? They are by far the most corrupt bank in the world. Same thing with Bitcoin. Jamie Dimon got caught calling I don't want to talk too much. I have so many side stories, but I want to try to get through the article, but I think this is kind of a funny one. Jamie Dimon, which is obviously CEO of JP Morgan, back in like 2016, 2017, when Bitcoin was the big thing at that time, came out and called Bitcoin a scam. He mentioned it all over news channels and everywhere, and everyone sold their Bitcoin. Bitcoin dropped down thousands upon thousands upon thousands of dollars within hours. And then right after that, guess who got caught buying millions upon millions of dollars in Bitcoin? Jamie Dimon. Why would he buy so much Bitcoin after he just publicly went out in public and said it was worthless and it was a scam? He did that because he knew it would shoot the price down and then he could get it for cheaper. Same thing that he's doing with silver. How did they know he was buying Bitcoin? Because the blockchain stores every transaction publicly. It's decentralized. Every single transaction anyone does is public information on the blockchain. So yeah, that was a pretty funny thing, and it's kind of similar to what they do with silver. Suppress the price so they can buy more of it for cheaper. So now let's face it, the Silver Institute publishing data more bullish than ever. In its history of never speaking of anything overtly bullish for all decades that followed. And I've caught this as well. I caught this last year. I've never seen the Silver Institute give price forecasts at all, and two, bullish. They were even coming out and saying this. It wasn't just Bank of America or Citibank that comes out every year and predicts $50 silver. No, we're talking about the Silver Institute themselves, the holy grail information, even though the information might be a little skewed here and there. But that's where the numbers get put. Everyone follows them, and they come out and said it. I'm glad that Ted Butler noticed that. So the actual situation in silver must be bullish indeed, since the kingpin of all things silver, JP Morgan, would seem to be ideally positioned for an upside rocket ride. It's hard for me to understand why such a move would be delayed for much longer. Everything indicates that when we go in silver, we will be big. We will go in big and fast with no hesitation or backing and filling. And here's the thing. And backing and filling means price stability, which is interesting. That's interesting because a lot of times if silver does explode, you'd want it to build stability. So then when that correction does hit, it could fall back on some type of stable pricing. But if we're talking about a price explosion to the degree that Ted Butler is, especially if the COMEX gets exposed or whatever, then who knows? The sky literally is the limit, especially comparing it to a worthless dollar. Comparing silver's price to worthless dollars. But anyways, look at the data published by the Silver Institute, no friend to higher silver prices, and try to explain how much longer can industrial demand grow and mine supply stagnate before higher prices are required. And remember that increased industrial silver demand reduces the amount of silver available to investors. The long-term manipulation on the COMEX may have succeeded to this point in suppressing the price of silver, but it's a law of supply and demand that will have the last word and fairly soon. Wow. This is exactly, he's like, he speaks my language. This is exactly what I say. You can try to suppress the price all you want, but the fundamentals, supply and demand, will always override it. And like I say all the time, silver stackers always have the last laugh. I like how he says this. Supply and demand will always have the last word and fairly soon. So yeah, I mean, you can see why I like his work so much because he gets it, you know? There's very few people that get it, and Ted Butler gets it to a degree I've never seen before. In this interview now, first you saw his facts, you saw his case. Now you get to hear a little bit of his personality and how he answers questions given to him, not just writing an article. Now you get to hear him put on the spot and how he responds to questions that might be sometimes even trying to put him in a corner. Check this out. Jim Cook interviews Ted Butler. This is a good one. Jim Cook. Is the public's interest and knowledge about silver picking up? Butler says, I'd say yes overall, but I am still of the opinion that most still don't fully grasp how silver has been manipulated and suppressed in price for over 40 years. And this is the absolute key to why someone should buy and hold silver. That's important. Price suppression has been, silver's price, like Andy Schectman says, price is the greatest tool of misdirection. People don't think anything of silver because of the price. Well, the price is suppressed, and like he mentioned, someday, fairly soon, that won't be the case. So you need to not let the price affect your opinion on silver. Look at the actual value itself. So Jim Cook, I'll stop breaking off all the time. It's hard not to, but I'll try to just let him speak. So, Jim Cook, you have suggested that the price of silver will explode upwards rather than make small gains. Why is that? And that's exactly what I just said. He says no filling backwards. It's exactly what I was just mentioning. It was interesting he said that. It's just going to go straight up. So that's good that Jim Cook noticed this. See, this is how I can tell when I'm doing it again, I'm already breaking off. It's interesting. I can catch little things. I've caught the little things with Ted Butler, and I've caught the little things like that Jim Cook mentions that most interviewers would have never even done the research to figure out or even have the reflection to look at something of that importance and why that matters. So I like this stuff. So anyways, Ted Butler. Silver price rallies have always been capped and contained by concentrated short selling on the COMEX by the largest banks. This is at the core of the decades-old price manipulation. When the big commercials refrain from adding new shorts on silver price rallies, a selling void will cause the price to explode. It will be all bid and no offer. Jim Cook, why can't the commercials keep adding shorts as they have done for decades? These big banks have unlimited money. Ted Butler, top of the list is a developing physical silver shortage for the first time in history. Verifiable data indicates shrinking world inventories. It's another reason for a price explosion. Jim Cook, well, why haven't prices already risen? Butler replies, because the COMEX paper rigging manipulation has succeeded to this point in overwhelming the physical silver shortage. Another reason is the worldwide acceptance of paper price COMEX as the real price. The most important point is that the COMEX price is almost exclusively a phony price set up by two opposing groups of paper traders, the banks and the managed money traders, which involve zero physical dealings. Jim Cook, what makes it illegal? The largest short sellers act in unison to impact the price one way or another. U.S. commodity law holds that speculative derivatives trading must not dictate prices. Jim Cook, will it end? Butler says, a physical silver shortage or physical shortage of any commodity must eventually cause prices to climb high enough to increase supply through new production. Higher prices also limit demand, causing the physical shortage to end. The physical shortage in silver has been building for 40 years. The coming increase in price must be dramatic enough to offset the damage and compensate for the time the price was manipulated and suppressed. Jim Cook, the current price of silver is way below what the free market price would be. Isn't short selling silver extremely dangerous? Ted Butler replies, the big commercial shorts are more aware of this than anyone. And when they refrain from adding shorts on a future silver rally, the move to higher prices would be magnified by this selling vacuum. Jim Cook, it's taking more time than you thought, right? Ted Butler says, yes, I thought it would end back in the mid-1980s when I first started petitioning the regulators and the exchanges. Jim Cook says, you recently claimed that the fireworks would start soon. Are you sticking with that? Ted Butler says, absolutely. I can't predict the precise point of the silver price explosion. All the signs, from the physical shortage to the growing awareness that silver is suppressed in price, mean the fireworks start sooner than later. He's saying, this is going to happen sooner than later. You don't want to miss the boat. The days of $24 silver might be soon gone, and you'll be wishing you could build a time capsule and go back in time and buy an ounce of silver for $25, $26. So Jim Cook says, so what do you say to the frustrated silver holders? Butler says, it can't take much longer until this fraud ends due to the emergence of the first physical silver shortage in history. Nothing is more bullish than a shortage of a critically important commodity. Cook says, since we established a relationship in 2001, silver's gone from $4 an ounce to $24 an ounce. Would you say long-term holders are ahead? Butler says, prices did get as high as $50 12 years ago. But while most of my table thumping to buy silver has proven to be profitable, there was silver also bought at prices 30 or above, or even 40. And those purchases are held at a loss, although I don't think for that long. And that's a good point. A lot of people, let's say the Wall Street silver movement, they bought in at $30 February 2021. They might be looking at $24 silver and saying, man, or $23 silver saying, man, I'm in the red, I made a mistake, I should just get out. That's the worst thing to do. You don't buy high and just pray it goes higher. That's how you lose money. You keep it at $30 because if you understand silver, you know it will go much higher. And that's what Jim Cook is saying, or Ted Butler is saying, right? It won't be for long until they are holding at, they won't be holding at a loss. So Jim Cook, what should people know about investing in silver? Butler says the real lesson is to buy silver when it's cheap, like now. Jim Cook, how high might silver go in the months ahead? Butler, one of the rules of intelligent forecasting is to either pick a price or a long time period, but never both. However, in silver, I look at it differently. Since the price of silver has been continues to be manipulated, the question is, what will the price be when manipulation ends? And my answer is many times the current price in a remarkably short period of time. Like they say, 90% of the movement happens the last 10% of the race. That's something that he's blatantly saying will happen. It will explode overnight. You won't have a chance to slowly keep buying as the price rises. It will just go from one day this to next day that. And if you bought while it was cheap, great for you. If not, you're going to be regretting it, kicking yourself in the butt just like people with Bitcoin. So, Jim Cook, can you agree with the analyst that said silver should be held for a lifetime? Butler said, that's a good question. Should you sell back to fake money someday? Butler says in some ways, but the whole point of investing is the postponement of current consumption to meet future financial goals. So when silver prices move high enough to meet important financial goals, I see nothing wrong with selling enough silver to do so. And I agree. You could pass them down to your kids and grandkids. What if you want to retire, pay off your mortgage if you can profit that much? Then do so. Why not? Do what you want. I can't, it's really up to you. So, Jim Cook, do you see silver as an important inflation hedge? And now I see why he asked the question above. Butler says silver's suppressed and manipulated price is so low that it qualifies as just about every type of future hedge because it's not hard for me to imagine that when the manipulation ends, the price reaction higher will be every other asset and benchmark. Cook, what happens if an industrial user can't get silver? Good question. The jig's up. Delays in shipments to users can't be tolerated, despite delays being tolerated by investors. And this is where I always say, I've been saying this for years now. Years. Producers will turn into the consumers, and the consumers will turn into the producers. The people like you and I that want the silver will be selling it to the people that need the silver. And yes, they will need it. Elon Musk, you think what are they going to do if he can't find silver? Cut back the production of Tesla or the amount they make per year, or pay a higher price, and then that will in turn push up the cost of production and turn pushing up the retail value? I mean, there's a much bigger picture at play when we're talking about people that actually need silver to create these electric vehicles and solar panels. So to investors, delays in silver purchase are tolerated as long as the dealer's right, and that's what I'm saying, Delay, but to users, producers, delays mean closing assembly lines and furloughing employees. Delays mean users will rush to build up physical silver stockpiles to avoid production shutdowns. And this is exactly why Elon Musk bought a silver mine, right? Or supposedly did. I don't know if he did, for sure did, but I know he was going to. I don't know if purchase actually is. I don't know if he actually has one in his name yet, but I know that last year that he was going to, for obvious reasons. So anyways, what kind of problem can the COMEX experience with silver? Butler says, I suppose threats of delivery defaults, but that's not high on my list, as I'm more inclined to believe that insiders at the COMEX are well informed enough as sidestep clear delivery defaults. In the end, they know what they know that when the physical silver shortage arrives in earnest, it will be best to stand aside. Jim Cook, do you think silver could ever develop into an asset bubble? Butler says silver has the best chance of any commodity to develop into an asset bubble, perhaps the greatest asset bubble in history. An asset bubble occurs when a large number of buyers bid the price much higher than underlying valuations would support. The bubble reaches its zenith when the caution is thrown in the wind and prices shoot higher. Cook, what are you predicting blow off in the silver price? Quite possibly. Or he says, are you predicting a blow-off? He says, quite possibly the stage is set for something the world has never experienced before, an asset bubble accompanied by an industrial shortage. These are two greatest upward price forces known to man. An asset bubble and a genuine commodity shortage appear to set to be combining in silver. Either alone, one would have profound impact. Even alone, one would. But the combination makes it impossible to forecast how high the price of silver can go. Cook, will this overwhelm the manipulators? Absolutely. The COMEX silver manipulation is a key ingredient to the greatest potential investment score ever. If silver wasn't manipulated, I wouldn't buy or hold silver because that would mean free market forces were setting the prices. In other words, if silver wasn't manipulated, there would not be so many reasons to buy it. That is incredible. I really like this article. Now you can see why I follow Ted Butler, and I appreciate his research and his work, because he definitely exposes stuff that people need to know. I'm going to wrap this video up here. This is a long video. Hopefully you stuck all the way through. If you guys want to purchase Silver Slayer at milesfranklin.com, you don't have to. I don't care. I'm not making these videos trying to sell you something. I've been making silver videos since 2015, 2016, and didn't even start brokering or even having anything to do with that until just a couple months ago. Actually, like 2 months ago. This is not about that. Buy wherever you want. I just have an opportunity for you guys to buy from a trusted place, especially if you're newer, with good prices. But that's not the point. Point is, just keep buying it. I buy it every 2 weeks. I buy it when I get my paycheck. And, it's just something you need to be doing, because Ted Butler explained it perfectly. You don't want to be on the opposite side of the fence when this thing takes off, and then you're having to start buying silver as a beginner at $100 plus. So anyways, yeah. Make sure you like this video. Please subscribe, share it, anything you want, comment, let me know. I appreciate you guys. Thanks for tuning in. This is Silver Slayer. I'll see you guys tomorrow. Peace.